Hello traders, this is Dez here at Grok Trade on Wednesday, June 20th, 2012. It's a scorcher out there, over 90 degrees in my neck of the woods here in Indiana. And we're getting ready to head to Vegas where my corporate headquarters is located for a mentorship, and it's over 100 degrees there. That is a good excuse to stay indoors. This is the first day of summer, so it feels like we've had a big summer already. Let's take a look at the markets here. We have mixed market, NASDAQ in positive territory, but just by a bit. Dow down, S&P down. Russell's down by the most, down 0.3%. What's interesting is you had the Russell's down, leading the markets to the downside, but the NASDAQ, which usually they usually coincided quite well here, doing the best, so they couldn't be any further apart as far as the major indices are concerned. Banks up, VIX down 6%, down at 17. Check that out. Gold down in a big way, down 0.8%. Silver down 1.4%. Crude oil down a whopping, a staggering 3.8%. US dollar up fractionally. And you had transportation taking one on the chin, down 0.42%, and utilities down over 1%. Let's take a look here at what's taking place on the S&P. Now, we did have the Fed come out today, and even with the Fed coming out and taking an arrow out of its quiver, the market still slipped. I'm reading here. It says the blue chips fell mildly in choppy trade after the Fed revealed plans to extend Operation Twist, quote unquote, but came short of unleashing a more potent form of easing that some had hoped for. And here it is. We had this falling wedge. Falling wedge did just what it's supposed to. It broke out. We go into a bullish pennant or a high base, and that breaks out just as it's supposed to. So we've been extended here for some time, but here's what I want you to look at. We have a hanging man. Now, we had a hanging man there, but we never did make a new low. Because of that, it never did confirm a reversal. Another hanging man, but this one's more bearish. One, because of the color, it's red opposed to white. The other reason is because we have a lower high. It's the first time we had a lower high going back here in early June. So we have that, but I want you to pay a special attention to the 100-day simple moving average. That's that green line coming over, and then this red line coming down is my 50 simple moving average. And you'll see that price action is caught between those two. At one point, it made a low right at it, made a high right to this moving average. But when the news broke on Operation Twist with the Feds, we did pop higher, but then sold off. And anyway, anytime you get price action getting squeezed between two moving averages, expect big movement one direction or the other. It usually happens between the 20 and the 50, so it'd be interesting to see if the 100 and the 50 will do the same. Now, my bet is this. Because of this long extension, we have a better chance of a drop commencing than a continued rally. The best thing for the markets right now would be a sideways base the next few days, and then a pop from there. Looking here at a weekly chart, this is huge. Big drop, bear pullback to the 20-week moving average, and staying below the all-important 61.8 Fibonacci retracement area. This gives us a massive chance of a sizable down leg happening. Going, and that would be starting in July, probably maybe even starting here in June, and then going into July, August, into the fall, and maybe a rally from there. So it's something that we're watching. At this moment, we have gold prices above 1600. We're at 1607, almost 1608, and crude oil is at $81 a barrel. Keep in mind, anytime you watch our videos, you can hit full screen to see everything in great clarity. And keep in mind that we strive to be the best when it comes to online trading education. So spread the word, let people know that they can come and watch free courses, over 4 hours of 101 home study. So if you want a free home study and you are willing to take 6 courses with 30 lessons, again 4 hours long, come to freeonlinetradingeducation.com and enjoy yourself. Again, spread the word, and thanks for chatting down below. And if you're there on YouTube, give us a click on the like button. It'll only take you a second.